Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to be for high-quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about USDCAD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we will be checking the data precisely for the USDCAD. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. Now, starting from the monthly time frame, what we can see is that we just had a very strong impulse to the upside, followed by this complex correction. Now, generally speaking, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse leg. If we do that, we can see how we had a perfect 50% and 0.618 Fibonacci retracements that if we extend to the left, we can see how we're lining up perfectly with this previous level of resistance that after the market broke it to the upside here was turned support here and again support here. This means that all this area was actually a quite strong confluence of support, inside of which we had both the Fibonacci levels and the previous resistance turned support, which this market has now tested and is rejecting to the upside. So from a monthly perspective, we could expect more potential bullish continuation. Now, dropping down on the weekly time frame, what do we have? Now, from a weekly standpoint, the structure is quite easy to identify. This was the previous resistance, again resistance here, and again here, which the market broke to the upside, currently retested as support, and is currently respecting as support. Now, if it is not that easy for you to identify the structure, there is a quick trick that you can use. Go down on a line chart, and on the line chart, you will quickly identify that essentially you have these two angles exactly at these two levels, right? One is this one here, and one is this one here. Now, these are weekly closes. That is when you have essentially the angle. And if you see levels like this, these are very important structured zones. Now, in this case, since the market is approaching them from above, these are quite important structure support zones. And switching back to candles, it will be now very easy for you to identify this area as a strong support zone that the market is currently approaching from above, respecting as support and rejecting to the upside. So at the moment, here on the weekly as well, everything looks quite bullish. Dropping down on the daily time frame, what do we have? Now, from a daily standpoint, I did speak about USDCAD a couple of times in the past. I spoke about it when the market was here. I explained all the reasons for which we could expect this rejection to the upside, and that is exactly what the market gave us. Then we had the creation of this W and explained all the reasons for which we could expect the completion at the neckline. And again, that is exactly what the market did. And by the way, I will link in the description those two previous analyses, so you can go and check them out for more free education. Now, at the moment, what we must identify is that this level here is quite strong resistance. From here, all this previous rejection to the downside was created. Again, here, the market tested its zone and rejected it to the downside. And until the market will remain below this resistance, it can easily be rejected to the downside. So what we would need in order for the market to continue higher is to first see a potential break above this resistance. Only if we get the break on the retest of the previous resistance turn support, this is the area inside of which we would have the possibility of seeing more institutional longing, which at that point would further increase the probabilities of a potential move higher. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market, and we check the data precisely for the CAD, what we can see is that with the last reports, net positions have been massively decreased on the CAD. Now, if we're checking the data for the CAD, we're actually already checking CAD USD because all currencies on the spot are traded against the USD. So if we want USD CAD, we simply have to reverse everything. And what we can see here is that we went from plus 6.3K net positions, so with institutions having more longs than shorts on the CAD, to now having a quite massive negative net positioning with minus 48K net positions with way more shorts than longs. So institutions shorting CAD USD means that institutions are longing USD CAD. So this means that if we get a break above this resistance on the retest, there is definitely the possibility to see more institutional longing inside of this zone, which in turn would further increase the probabilities of a potential move higher away from the level. So if we get the break on the retest, how we could be approaching this potential move higher? Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential move higher for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I'd really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here past the testimonials, you will see that at the moment there is a massive special promotion in which you have a huge discount on the upfront price of the program from $497 all the way down to only $97 one-time payment. And if you scroll lower, you will see that at the moment the time to join with this special promotion is starting to run out. So I really suggest to go and check it out as soon as possible. You find the link in description. And when you go on it, you will see that directly from here there is the button to join in order to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. The link is in the description and I will see you in it. If you enjoyed the video, make sure to drop a like. Also, let me know in the comments below any pairs or topics that you would like me to cover in the next videos, and I will see you in my next breakdown.